All right, let's dive in today. We're tackling microfinance in West Africa.
A fascinating area.
It really is. I mean, we're talking about big impact with even small loans, but there's a lot more to it.
Right. It's not that simple.
Not at all. We've actually got 8 different sources for this deep dive. Legal stuff, industry reports, even some history to dig through.
Gives us a real well-rounded view, which is important.
Absolutely. So to make sure we're both on the same page, can you give us a quick rundown of what microfinance is?
Sure. Microfinance is essentially about providing financial services to people and communities that traditional banks don't typically reach.
Okay, so filling that gap, what does that look like in West Africa specifically?
It's mostly small loans, but also things like savings accounts, insurance, even money transfers, all designed to help people build businesses, manage their money, and work towards a better future.
Got it. But like we said, it's not as simple as just handing out cash. What kind of rules and regulations are we talking about here?
Yeah, there's a whole legal framework in place. In the WEMU zone, which covers a big chunk of West Africa, they have something called the Loi Uniform. It's basically the rule book for microfinance institutions, or MFIs.
So kind of like their constitution for microfinance.
Exactly. It outlines what MFIs can and can't do, who they can lend to, how much they can charge in interest, that kind of thing.
And who makes sure everyone's following the rules?
Well, the Central Bank of West African States, the BCEAO, they're the big watchdog. They keep a close eye on the larger MFIs.
Makes sense. You want to tailor the oversight to the size of the institution, right?
Right. And for the smaller ones, it's usually the Ministry of Finance that handles supervision.
Okay, so a tiered approach. What happens if an MFI breaks the rules, though?
It's not taken lightly, that's for sure.
Oh, really?
Yeah, the Projet de Loi Microfinance, and there's a specific Article 80 that gets into it, lays out some serious consequences. We're talking big fines, suspensions, even losing their license in some cases.
Wow, they mean business. So it's not just a slap on the wrist.
No, not at all. And it's not just the MFIs themselves that have to follow rules. There are also regulations for credit information bureaus, the BICs.
BICs, those are the ones that keep track of people's credit history, right?
Exactly. They play a crucial role, but they handle a lot of sensitive data. So they've got their own set of regulations, particularly around data privacy. The Loi Uniforme portant réglementation des bureaux d'information sur le crédit covers a lot of that.
Sounds like it could get pretty complicated, especially for smaller MFIs just trying to navigate all of this.
It definitely can be. It raises a big question. Do all these rules, even if they're meant to be helpful, end up stifling innovation? Or are they essential to keep the whole system stable and trustworthy?
It's a tough balance to strike. You want to encourage growth and new ideas, but also make sure things are done responsibly.
Absolutely. And that's something we see playing out in the microfinance sector all the time.
Speaking of challenges, it's not just the regulatory landscape that can be tough. What are some of the other hurdles that MFIs in West Africa face?
Well, for one, it's important to understand the historical context. Microfinance in West Africa isn't new. It's got roots going back decades, and it's gone through a lot of changes. There's a really insightful article, Microfinance en Afrique de l'Ouest, Histoire, Défis et Limites, that digs into this.
So take us back in time a bit. How did microfinance in West Africa get started?
Well, it really took off in the 1970s and 80s with the rise of NGOs and small credit schemes. A lot of them were focused on rural areas, providing small loans to farmers and women who couldn't access traditional banks.
Making a real difference in those communities.
Absolutely. But as microfinance grew, it also faced criticism. Some argued that it wasn't doing enough to lift people out of poverty, that it was just creating a cycle of debt.
So that classic debate, is it helping or hurting?
Exactly. And it's not a simple answer, of course, but it led to a lot of soul-searching within the sector and a push to become more professional, more transparent, and more focused on impact.
To really prove that they were making a positive difference.
Exactly. And that led to changes in how MFIs operate, how they measure success, and how they're regulated.
So it sounds like it's been a journey, for sure. A lot of evolution and adaptation along the way.
It really has. And one of the biggest challenges MFIs face, even today, is balancing their social mission with the need to be financially sustainable.
Because ideally, you want to help as many people as possible, but you also need to make sure the lights stay on, right?
Exactly. It's that constant tension between doing good and doing well. And sometimes that can lead to something called mission drift.
Mission drift, what does that mean in the context of microfinance?
It's when an MFI perhaps in an attempt to become more profitable, starts to move away from its original social mission of serving the poorest and most vulnerable.
So instead of focusing on those who need it most, they might start targeting clients who are deemed less risky or more profitable.
Precisely. And that shift, that mission drift, can have real consequences, especially in a region like West Africa, where poverty and inequality are still major challenges.
Absolutely. You don't want to see the very people who microfinance was designed to help being left behind.
Exactly. That's why it's so important to have those checks and balances in place, to have strong regulations, ethical guidelines, and a constant focus on impact.
To make sure that microfinance stays true to its roots and fulfills its potential as a powerful tool for social and economic empowerment, it's a tightrope walk, for sure, balancing profit and purpose. And speaking of balancing acts, let's talk about digitalization. It's everywhere these days, and it's changing the game for microfinance, too. What's your take? Is it the revolution everyone seems to think it is?
It has the potential, that's for sure. Even the BCEAO is really pushing for it. They've got this guide pour la digitalisation des opérations financières des SFD that lays out their vision.
So they're all in on digital.
Definitely. They see it as key to expanding reach, making things more efficient, and ultimately getting closer to that goal of true financial inclusion.
Which makes sense. I mean, think about how many people have mobile phones these days, even in remote areas.
Exactly. But there are also valid concerns. We can't just assume digitalization is a magic bullet.
Right, like that old saying, just because you can doesn't mean you should. What are some of the potential downsides, especially in a place like West Africa, where access to technology isn't always equal?
Well, cybersecurity is a big one. As MFIs rely more on digital systems, they become bigger targets for hackers. A data breach could be disastrous.
Absolutely. And then there's the whole issue of digital literacy.
Huge point. You need the skills to actually use these digital tools. What good is a mobile banking app if you can barely read or don't have reliable internet?
Right. Not everyone's walking around with the latest smartphone and unlimited data. So training is key, right? Making sure people are comfortable with the technology.
100%. Both MFI staff and their clients need the training and support to thrive in a digital world.
Makes sense. So digitalization, it's not a one-size-fits-all solution. It's got to be done thoughtfully, or it could actually widen the gap instead of closing it.
Absolutely. And we have to remember the human element. Technology can be a powerful tool, but it's the people behind it that make the real difference.
Speaking of people, let's circle back to those credit information bureaus, the BICs. We talked about their role in managing credit history, but how do they fit into this increasingly digital landscape, especially with data privacy being such a big deal these days?
It's a critical question. You're right, data privacy is paramount, especially when dealing with sensitive financial information. And that's where those regulations we discussed earlier come into play. The BCEAO has put in place strict rules for how BICs collect, store, and share data, all laid out in the Loi Uniforme Portant Réglementation des Bureaux d'Information sur le Crédit.
So it's a very regulated space. They can't just hand out someone's financial history to anyone who asks.
Right. It's all about transparency and accountability. Individuals have the right to access their own credit information and correct any errors. It helps build trust in the system.
Right, because trust is everything when it comes to finance. People need to feel confident that their information is being handled responsibly.
Absolutely. And it's not just about preventing fraud. Building a culture of transparency and accountability is good for everyone.
Makes sense. Now, you mentioned earlier that the BCEAO is really pushing for digitalization, even beyond just payments. What are some of the other ways they're trying to nudge the sector in that direction?
Well, one thing they're really emphasizing is the use of non-convertible payment methods.
Non-convertible. Can you break that down for us? What does that actually mean?
Think of it like electronic money that can't be exchanged back into physical cash. Mobile wallets, prepaid cards, those kinds of things. It's about promoting digital transactions and reducing reliance on physical cash.
Interesting. So almost like leapfrogging over the whole physical cash system and going straight to digital.
Exactly. And it makes a lot of sense, especially in places where traditional banking infrastructure might not be as developed.
Right. It's about meeting people where they are and providing solutions that work within their context. But it's not just about the technology itself. It's about how it's used, right?
Absolutely. And that's why the BCEAO is also encouraging MFIs to offer a wider range of services through digital channels, things like insurance, remittances, even Islamic finance products. It's about making sure everyone has access to the financial tools they need, regardless of where they live or what their needs are.
It's about creating a truly inclusive financial system. I like that. But shifting gears a bit, we've talked a lot about the BCEAO and regulations, but what about the MFIs themselves? How are they adapting to this rapidly changing landscape?
It's a mixed bag, to be honest. Some are embracing digitalization full on, investing in new technologies, developing innovative products and services. Others are a bit more hesitant, maybe struggling with the costs, the technical expertise required, or even just the uncertainty of it all.
I imagine it's a lot to take on, especially for those smaller MFIs with limited resources.
For sure. And then there's the question of whether they're using technology to genuinely improve their services or just to cut costs and boost profits.
Right, because the ultimate goal should be to better serve the clients, not just the bottom line.
Exactly. But there are some really inspiring examples out there of MFIs using technology in really impactful ways. Some are using mobile technology to collect data on their clients' needs and preferences, which helps them tailor their products and services more effectively.
So using data not just for efficiency, but to actually listen to their clients and understand their needs. I like that.
It's about meeting people where they are and giving them the tools they need to succeed.
Absolutely. So it's not just about the technology itself, it's about the human element, the intention behind it, and the impact it has on people's lives. But we'd be remiss if we didn't acknowledge the potential downsides here. We've talked about mission drift. What are some other risks of digitalization that we should be aware of?
One that comes to mind is the potential to exacerbate existing inequalities. If we're not careful, digitalization could end up benefiting those who are already digitally literate and connected, while further marginalizing those who aren't.
So widening the digital divide instead of closing it, that would definitely be a step in the wrong direction.
For sure. And then there's the whole issue of data privacy and security, which we touched on earlier. As MFIs collect more and more data on their clients, it becomes even more critical to have robust systems in place to protect that information from misuse or breaches.
Because once that trust is broken, it's very hard to rebuild.
Absolutely. And we can't forget about the potential for algorithmic bias. As MFIs increasingly rely on algorithms to make lending decisions, there's a risk that those algorithms could perpetuate or even amplify existing biases in the data they're trained on.
So, for example, if historically certain groups have had less access to financial services, the data might reflect that. And the algorithm could unfairly penalize those groups in the future, even if the reasons for that disparity were rooted in discrimination.
You got it. That's why it's crucial to develop and implement these algorithms responsibly, with careful consideration of fairness and equity.
Right. It's not just about the tech itself. It's about the human choices we make about how we design it, how we use it, and what values we embed in it.
Couldn't agree more.
So it's about constantly questioning, constantly evaluating, and making sure that technology is serving us, not the other way around.
Exactly.
Now, bringing it back to the regulatory landscape, how is the Loi uniform, the main legal framework we discussed earlier, addressing these new digital challenges?
It's an interesting question. The Loi uniform, as comprehensive as it is, was actually drafted before the digital revolution really took hold. So while it provides a solid foundation, it doesn't specifically address all the nuances of digital financial services.
So there might be some gaps that need to be filled, some updates needed to keep pace with the times.
Exactly. And the BCEAO recognizes this. They've issued additional guidelines and regulations specific to digital financial services, and they're constantly monitoring the situation to see if any further adjustments are needed.
It's a constantly evolving landscape, and it sounds like the BCEAO is at least trying to stay ahead of the curve. But it's not just about the BCEAO, right? What about the Microfinance en Afrique de l'Ouest, Histoire, Défis et Limites article we discussed earlier? Does it offer any insights into how the sector itself is grappling with these digital challenges?
It does. It actually highlights how digitalization isn't just about adopting new technologies. It's about transforming organizational cultures and mindsets.
It's about more than just checking boxes and complying with regulations. It's about a fundamental shift in how they operate.
Right. The article argues that MFIs need to fully embrace a data-driven approach, develop new skills, and foster a culture of innovation.
So it's a huge undertaking, but it sounds like it's not just about individual MFIs figuring this out on their own. Collaboration is key, right?
Absolutely. The article emphasizes the importance of partnerships, knowledge sharing, and collective action.
So MFIs working together, maybe even with fintech companies or other players in the tech space.
Exactly. It's about pooling resources, sharing best practices, and learning from each other's successes and failures.
It's about creating a true ecosystem for innovation and growth. Now, we've talked a lot about the potential of digitalization to increase access to financial services, but access alone isn't enough, is it?
You're absolutely right. It's not just about having a bank account or a mobile wallet. It's about having the knowledge and skills to use those tools effectively.
So financial literacy is key.
It's essential. And digital financial literacy is even more important in today's world. People need to understand how digital financial products work, how to manage their money online, how to protect themselves from fraud.
It's about empowering people to make informed decisions about their finances in a rapidly changing digital landscape.
Precisely. And that's why it's so important for MFIs, governments, and other stakeholders to invest in financial literacy programs that are tailored to the specific needs of their target audience.
It's about meeting people where they are, understanding their challenges, and providing them with the knowledge and skills they need to succeed in the digital age. And that's a whole other layer to this complex issue, isn't it?
It certainly is.
And that's why we're here, right? To peel back the layers and try to make sense of it all.
That's what makes it so fascinating.
Speaking of fascinating, one of the things that I find really interesting about microfinance is its potential to empower women who often face greater barriers to traditional financial services. How has digitalization impacted that aspect of microfinance, would you say?
It's been a really fascinating discussion so far. But after all this, I have to ask the big question. Does microfinance in West Africa actually work? I mean, does it really deliver on that promise of empowerment and financial inclusion?
That is the million-dollar question, isn't it?
It is. And I'm guessing there's no easy answer. You're right, there isn't. It's not a magic bullet, that's for sure. But it's also not just hype. The impact of microfinance, it really depends on the context.
So not a fairy tale where everyone gets a loan and instantly escapes poverty, but also not some kind of predatory trap.
Exactly. There are definitely success stories. I mean, people using small loans to start businesses, improve their lives, there's real impact there.
That's what you want to hear.
Right. And there's actually data to back it up. Studies show a connection between microfinance and things like higher income, better food security, even health outcomes. It can make a real difference.
That's encouraging. But let's be honest, we've got to acknowledge the potential downsides too. We talked about mission drift earlier. And then there's always the risk of, I don't know, predatory lending practices, interest rates that are just way too high.
Oh, absolutely. It's crucial to be aware of those risks. That's why things like strong regulations, ethical guidelines for lenders, those are so important. It's a balance, right? We want a thriving microfinance sector, but we also need to protect vulnerable borrowers.
It makes sense because it's not just about giving people loans, it's about making sure those loans are actually helping them build a better future.
Right. It's about responsible finance, not just any finance.
Exactly. And that's why I think hearing from the people actually involved in microfinance, both the successes and the struggles, that's got to be crucial, right?
100%. Those stories, those lived experiences, they add so much nuance to the data.
And they remind us that we're talking about real people, not just numbers on a spreadsheet.
For sure.
Now, you mentioned something earlier about women often facing unique challenges when it comes to accessing financial services. We know that MFIs in West Africa have traditionally focused on women, but has that actually led to more empowerment for them?
It's a complicated question. On the one hand, there's no doubt that microfinance has helped increase women's access to credit. There are a huge portion of microfinance clients in the region.
Which is a good thing.
Right.
But are they getting access to the same kinds of loans, the same opportunities as men?
That's where the gap still exists. While women are getting microloans, they're often smaller amounts compared to men. And accessing those more complex financial products like insurance or investment opportunities, that can be tougher for them.
So there are still hurdles to overcome, things that need to change to make sure women have a truly equal playing field.
Absolutely. And it's not just about access, it's about agency too. It's about making sure women have the information and the power to make their own financial decisions.
Because financial empowerment, that's about more than just having money. It's about having control over your own life and your own future.
Exactly. And that's something that microfinance done right can really help with.
So looking ahead, what are some of the big opportunities, the innovations that you're excited about in the world of microfinance in West Africa? What does the future hold?
I think the future's really bright, actually.
Really?
Yeah, I mean, think about it. Digitalization has the potential to totally revolutionize the sector. Imagine platforms connecting MFIs directly with investors all over the world.
Wow, that could be huge for funding.
Right. Or AI helping to create personalized loans, tailored to each borrower's specific needs. That's the kind of innovation we're talking about.
That's amazing. It sounds like technology could make microfinance even more efficient, more accessible, more impactful overall.
Exactly. But we have to remember, technology is a tool. It's up to us to use it responsibly, ethically.
To make sure it's used for good, not just for profit.
100%. It's about putting people first. Always.
And that's a good reminder as we wrap up this deep dive. We've covered a lot of ground today, from the laws and regulations to the challenges and opportunities facing microfinance in West Africa.
It's a complex landscape for sure.
It is. But what's clear is that microfinance has the potential to make a real difference in people's lives.
No doubt about it. When it's done well, it's incredibly powerful.
And as we've discussed, it's constantly evolving. Digitalization is changing the game, bringing both exciting possibilities and new challenges.
It's an exciting time to be involved in microfinance, that's for sure.
It really is. And for all of us, it's a reminder that we have a role to play in shaping the future of finance, in making sure it's more inclusive, more equitable, and ultimately more beneficial for everyone.
Well said. I couldn't agree more.
Well, on that note, thanks for joining us for this deep dive into the world of microfinance in West Africa. It's been a pleasure, as always. Until next time.